All right, Warren Alcon back, and today we're going to be going over the fundamentals of support and resistance areas. Now, being able to properly identify these areas is probably the most important skill that a trader can have. So let's get to it. As we covered in the last class, these areas represent major price action events. You have resistance, support, supply, demand, distribution, accumulation, overbought, and oversold areas. But what exactly are support and resistance areas on a chart? Well, they're areas on a chart that price has reacted to in the past, and there's a good chance that price is going to react to them again. See, when price breaks above resistance right here, that area can now become a support area. And just the opposite, when price breaks below an area of support, that support now becomes an area of resistance. Support and resistance on higher time frames are areas of value to big money and institutional traders. They look at these areas to enter and exit trades for massive gains and distribution. So from my point of view, there are two different kinds of support and resistance. We have static and dynamic. Static support and resistance can be defined as horizontal lines, areas on a chart. As we can see here, they are plotted along a horizontal axis between common price levels, from swing highs to swing lows, and even areas in between, such as in lower time frames, when we get down into the daily and even the hourly. I call them static because once they're set, these don't really move. They will be placed there almost permanently, and sometimes their relevance can remain intact for years. Just as if you look at this recent area here, you go all the way back to December 2017, this area still holds some relevance. So next, we have dynamic support and resistance, which comes in different forms. They can be lines on a chart that we draw on ourselves, such as a trend line. You can have a chart pattern, which you see here. Zoom in on the daily. Or you can even have a candlestick pattern, which is a head and shoulders pattern right here. A lot of these we're going to cover as the course moves on. When plotting out support and resistance, there's a few simple rules always that I keep in mind. First off, they always occur at swing highs and swing lows of price action. They should be obvious and easy to see. You shouldn't have to overthink it or really stare at a chart for an excessive period of time. They need at least 2 touches to be valid, and the more you have, the better. And unless if you're looking at an all-time high or even an all-time low. On lower time frames, daily and below, they should be recently formed. So if we're in the 1 hour, we have a very small, short-term area of support right here. I treat them as areas and not as a definitive price. You don't need to scrutinize the exact price point with your support and resistance. So why are these areas of support and resistance important to understand? As we mentioned earlier, these areas on higher time frames are key levels that whales, banks, and institutions look at to enter and exit positions. We also use these areas to volley between long and short positions. So let's get you familiar with setting up your support and resistance levels. On the left-hand side taskbar, you have all of your options. This top one here is your cursor tool, and you can go through across a dot, an arrow, or even an eraser. Right below it is your trend line and your different trend line options. So we're going to start with the first type of trend line, and whatever tool you're using at the moment will be highlighted in blue. So let's go down and select horizontal line. This line works off of a fixed horizontal plane from left to right. So it works really well with getting support and resistance levels set in quickly. So as you can see, we've got our major levels already pre-plotted right here. I'm going to zoom out just so you can see them a little more clearly. Now, I'm sure you can spot even more areas, such as possibly this small area right here. Don't really overthink your charts too much, because you don't want to have one for here, one for there, even one for right here. I like to keep them very simple. I want to keep my charts clean. Okay, so here we can also edit our support and resistance level lines, or almost any other indicator that we have. When you hover over it, you can just left click the mouse and this menu will pop up. This first one here, you can save it as a template or apply a default drawing template. I don't really use that, but you can select your color. Now with my weekly time frame support and resistance, I always keep them a dark gray just so they're not too visually aggressive. But you can change them, like on lower time frames, I will have them a little brighter. You can change the width of the pixels. You can also change the style, a solid line, a dashed line, or even a dotted line. You can go into full settings here and do the same thing that we just did. You can also lock your area. When it's unlocked and you're moving your charts around, you don't want to accidentally grab it and move it. You want to make sure that you can lock it in. And if you accidentally do move an indicator, you can press Control-Z on your PC to actually back off the last movement that you just did. So this is a really kind of a quick lesson. Wasn't really too much. Support and resistance is a very easy concept to grasp, and it's really the backbone for what we're going to be doing. So before we move on to homework, please hit the subscribe, like, and even the share buttons to help support the channel. So let's move on to your homework. Let's get your support and resistance drawn out on all of your tickers. So for right now, just keep it simple and stick to the weekly time frame. And remember to follow the rules and to keep it simple. And get ready for the next lesson. And actually, here's a little side quest for you. When you're done with that support and resistance on all of your tickers, just pretty much go through Bitcoin and look where price action reacted to at these areas in the past, how it bounced off, how it broke through, or how it fell out. Check to see if there are any major news releases or social media hits that could have affected price action. As you continue to trade, you'll start to notice that when price is rising, bad news will get released and it'll trigger a reversal, and sometimes good news. Or a special release hits and price breaks and it'll just go to the upside. These movements are totally natural and actually keep the market healthy and moving. So see if you can spot any of these trigger events. Get digging, and we'll see you in the next course.